Good evening, guys. Welcome to a live trading session. It's with me, obviously, Steve Ruffley. So what we're going to cover tonight is obviously the FOMC meetings, the Fed rate hike. Probably one of the last times we're going to come into one of these meetings after all these years. I've been saying it all these years. I've done these presentations. It's probably coming to the end of when we're going to hear unchanged. Okay, so lots going to happen potentially. We've seen a big sell-off in the last few hours in the pound versus the dollar in cable. We've seen a little bit of dollar strength, but that's come back. So I think a lot of big banks, a lot of people are positioning themselves. And really, what we're talking about today is not the rate hike. We know rates aren't going to change tonight. What we're thinking about is what's going to happen in the very near future. And all the things I'll go through after I've done the startup presentation will be all the things I've said for pretty much the last 3 years, but now they're all coming into fruition. All the things I've said have come true, and what is going to happen in the US will happen in the UK. A little bit premature on my thoughts of the UK, but I said they were going to go up this year, and you can't rule it out just yet. So I was a little bit, ahead of the curve on most people on that one. So before I start, as always, the risk warning. Remember that spread betting and CFD trading can have a highly risk or capital, resulting in losses that exceed your initial deposit. It might be suitable for everyone, so please ensure you fully understand the risks involved. The information comes provided here under no circumstances and offers solicitation to invest. Nothing you're introduced through investment advice. The information is believed to be accurate. The data is produced. Again, education only. Content of the webinar is personal opinion of the moderator at intro.com. The content is not constitute financial investment or tax advice. Intro.com is not liable to the content consumed during the session. So we're going to go over some live charting analysis. I'll go over some of the major currency pairs, probably have a quick look at gold, and maybe one eye on the S&P. Some fairly interesting volatile moves over the last few days, made trading particularly difficult. But if you have been able to take a good position and hold on, certainly some good profits to be made. Multiple time frame trading, show an example of that. That's the only way I know how to trade. Live real money trades. Got the big boy account open today, so we'll be trading my fund today. And any Q&A answers that you've got, let me know. So having a quick snapshot of the markets right now, we can see obviously this big down move in the pound. We'll go through that first because it's quite an interesting one. I was actually short just here, actually, and I got out just here. So that was quite annoying because, we could see from the 5-minute candles, the absolute extent of the sell-off was pretty brutal in that 5-minute candle. Just when I kind of got out below 50%, the market really, sold off and gave away all the day's trading range and some more. So this could again be positioning people positioning themselves around this thought today that Janet Yellen and the Fed are going to say that it's basically 2 hikes this year. Now, Janet Yellen promises this, crystal clear forward guidance after Ben Bernanke. Didn't come, did it? We've been kept guessing, and the market's made its own opinions, and we've been kept guessing on when rates are going to go up. And it's not really been if, it's when. And Janet Yellen's come out and said that we have to put rates up fairly soon because if we don't, the cycle we're going to have to put them up to normalise them is going to be a lot quicker and a lot harsher. At the end of the day, trying to normalise rates after you've had rates artificially low for so long is a very, very difficult thing. If anybody tells you what's going to happen when interest rates go up, they're lying because nobody knows, including myself, Ben Bernanke, Janet Yellen, the rest of the guys that, these so-called experts. At the end of the day, I would say that interest rates are cycles. There's absolutely nothing we can do, and it's not going to be for everybody, okay? It's not going to help a lot of low-income families that are heavily leveraged on debt. It's not going to help a lot of first-time buyers, but let's just face it, we don't care about that. We voted in the Tories, who don't give a stuff about the younger generation. So all the people that paid the mortgages off and they've got money in the bank, they'll be rubbing their little hands together, won't they? Because they'll be the ones who'll have the money until they die, and the younger generation get the money on it and absolutely spend a lot. So something I've said for a long time now, and that isn't going to change. That is absolutely inevitable that the baby boomer generation are going to die. A slightly disgruntled younger generation are going to get that money, not really know what to do with it, and it won't last very long. So interesting times ahead. So I guess we see a little bit of strength in the pound now, pre this announcement, maybe some profit taking, from the shorts, maybe just a little bit of, hedging going along. But really, the pound has hit these lows, then at one spot, 5.3, round about there, and we've got up to one spot 5.6. Still think there's value in the pound, back to one spot 6.3, one spot 6.4. So I think a long way to go in the pound before we finish buying it back up. So looking at other interesting commodities, obviously gold was quite an interesting one. We saw that, that huge daily sell-off and we haven't really got back to the 50%. We've made a new low, but we've not really made any significant efforts to get back up into the range. Now everybody finally is talking about selling gold, and it's going to go down to 1,000, 750, 850, whatever. Now they're finally talking about it. It might happen, but I think you can all remember my webinars, what my stance on gold has been, that it's always been going to get to $1,000 for me. And I've said this for, such a long time now that, again, I don't have to prove, if I know what I'm talking about, because if you listen to any of my webinars, then you know my position on the euro, my position on gold. And really, again, it's all come to fruition. It's all come true. So a big sell-off in gold. We've hit this hard bottom, really at 1.077. So we're just looking to test that again. Then we've only really got 130 to break, and then we're down to that $1,000. So $1,000 easily by mid next month, I would say. And then it's picking them bottoms, isn't it? Is it going to get down to 900, 800, 700? People are saying 450. I don't think it goes as low as 450, but I could easily see the market get to 700 in no real, great shakes. It'll get there fairly quickly, I would say. Indices remain fairly strong in the grand scheme of things. Again, this nice trend line that we've seen on the dailies working very well in the hourlies broke down, but now we're looking to hold above the 50% in the S&P, above 2,100. So I could easily say the S&P perhaps going on to make some new highs. We're still really very high in the range, and we haven't really dropped back into this lower trend line that I predicted. So, really for me, it's all about getting back to, 2148 and above, and, hitting higher. Well, interest rates are still low, and, although it's for a small amount of time, I think, that free money is still going to, filter through into the economy, and people are going to buy as much stocks as they can. As soon as interest rates go up, they're going to pull out of these risky investments. And let's face it, stocks are risky investments, but people just don't treat it like that. So when people pull the money out of the risky investments back into cash, which they will do, stocks are going to crash, okay? And we're going to see a big correction in the stocks, but not yet, okay? We've rejected a sell-off thus far and all these wicks that we've seen. So for me, yeah, we're still, going to get to this trend line, make some new highs, and then probably by September, October, when the rate hikes come into fruition, then we're going to be selling off. So keep buying the lows in the stocks. It served us well for the last 6 months. Keep one eye on the dollar Japanese yen. Again, if we see that rate hike, we might get back up to these upper levels, maybe at 1.24, spot 129, and maybe this nice Fibonacci level up here could be a good one. Again, it's all about understanding if the rate hike's going to be quicker than we think, quicker than the market's expecting, more aggressive than the market's expecting. These are the things we need to kind of, get a handle on today. It's not about the rate hike, is it? It's not about if, because they're not. It's when, how many, and how quick. So obviously, a lot of the dollar strength has been priced in, because the US was going to be the first to move on interest rates. So we saw some weakness in the euro, in the yen, in the pound. But now we know interest rates are going to go up in the US, but it's how high. So if we get a bit of a statement through that suggests that they won't go up as quick, as 2 this year and only 1, then we can see a big sell-off in the dollar. A lot of, euro weakness, euro strength, pound strength, and dollar yen weakness. But it all really depends. I mean, the whole point is there's going to be no post-meeting and there's no projection updates. So Janet Yellen has said all the decisions are made on the data that we've got. So maybe the non-farm payroll on Friday, it's going to be much more crucial. Next Friday, it's going to be much more crucial than this FOMC meeting today. But the first rate hike is pretty much all analysts are going for this year at some point. So it's not if, it is when this year. And then it's, is it going to be Q3 or is it Q4? If it's Q3, we're going to have one in Q4. I mean, basically, there's been 80 analysts polled from Bloomberg, and only one thing, the Fed funds rates are going to go up. So it's looking, from my mind, that the Fed's going to try and squeeze in 2 this year. So that's what I'm thinking. I certainly think that that the Fed have decided on their path, and once they go in, they're going to go all in, to use a poker term. They're going to basically put rates up as quick as they can, get people used to, not having that free credit anymore and that cheap money, and then just see how the markets react. See what happens to the stock markets, see what happens in the bond markets, and see what happens in the world in general. So if you do that before Christmas, you've got the rest of 2016 to play around with policy. But I'll tell you what, it's going to be interesting. Like I said, if anybody says they know what's going to happen, they're lying. Euro dollar again, I still maintain it's very, very weak. Okay, so the monthlies, you can see that big 9-month sell-off. We consolidated, but not really made any efforts to get back to the upper ranges. Greece doesn't seem to be, really favouring the euro now. Although we fixed, they're still all this talk now about a third bailout. Stop me if you've heard all this before. But now it's kind of like, no, you've agreed to all the terms now, so you're going to get your bailout, but you have to see them through. And you can just see that something's going to happen here. It isn't finished in Greece by a long stretch of the imagination. So the weeklies, I would say, we've really kind of topped out at this 1.1467 level, and really for me, the 50% is here. So I really think once we break below 1.08137, I'm expecting we're going to get down to 1.0 fairly soon, to be honest. If Deutsche Bank, UBS, and all the big currency players say it's going to get down to 1.0, then it's going to get down to 1.0. It's simple. These guys are 30, 40, 50% of the market. So there's no way I don't think that the euro is going to go up. It's going to go down before it goes up. So I'd be selling every high in the euro, and my stance on the euro. I said it's finished. Greece aren't going to stay in the euro, and I've said that a million times, and yes, I'm wrong. They are still in the euro, but they're getting ready to leave, at some point in the near future. That might be 6, 12, 18 months, 2 years. They're going to have to get out because there's no way that they can sustain a 25% cut in GDP over 5 years with the measures that Europe's brought in. They know it. Greece knows it. I know it. You know it. So it's just a matter of time, isn't it? So euro dollar, as I said, just depending on what he said today, again, it's not that we're going to come out unchanged. It's if any comments or how the market takes this. We've seen a big sell-off in the pound, so that could be an indication that we're looking for 2 rate hikes. And if we do, then we could see some strength continue back into this dollar yen. We could see then some weakness come back into the euro dollar, and then some weakness come back into the into cable. S&P. Again, generally, if it's 2 rate hikes, should sell off because, in the traditional sense, that's bad for the economy. Higher interest rates mean it's, not good for the economy in general, as in for people's spending on stocks. Gold, really, if we do have 2 rate hikes, should drop like a stone again, but it's been very, very choppy, very volatile, as I've said. So what I'm going to be doing today is really just in and out, to be honest, not trading massive size, just going to be in and out. I'm not going to try and hold anything too long, just try and feel the market, trade off the technical levels, and just try and get a feel for where some value is. It's very expensive having an opinion in the markets right now, unless you can hold positions for a good couple of days. So, as I said, I'm not bragging, but I'm a regulated fund manager now. I have my fund, I'm looking for people to invest in me. I'm up 25% in the last 3 months. You can't really argue with these kind of figures, and my average trade is anywhere between 20 and 25 minutes at the minute. Just because I'm looking for them big, moves in the markets, them big 15-minute candles, and just getting my money out. Sure, I'd have held every trade. I'd probably up 200%. But, you've got to have, risk management in these markets, and you've got to get your money in as quick as you can. And in my opinion, get it out because it's just too volatile. It's just too tricky to trade right now. But again, different traders, different people have different opinions. We all trade in different ways. My approach is always just to be honest and tell you guys, what's worked for me in the past, what hasn't, what you can do. Always be aware of the technicals and fundamentals, my 80-20 rule. And again, book's coming out the 30th of September, so by all means you can read that and get involved. If you just search that on FX Street, the book's already up. So plenty of stuff to go off. What now I'm going to do now is try and back up my talk and my views, with some trades. We'll have to see. We'll have to see what the market reaction is to this. All right, guys. So probably a lot's going to be said from me, depending on what I hear over the wires. Got a minute now before it comes out, so it's got to be quick. I'm keeping the hourlies on so we can see any big spikes. I'm looking for value. I'm not trying to make an opinion, but the consensus is, are we going to have 2 rate hikes this year? That's what the entire world is waiting for in 30 seconds' time. Are we going to have 2 or 1? That's what we're trying to figure out. 2, look for that dollar strength, pound and euro weakness. All right, guys, get ready. 10 seconds. Okay, watch the pound. Rates on hold, as suspected. Till September rate call, says the Fed. So watch the pound, watch the strength in the pound, weakness in the dollar. Okay, watch for gold. Okay, watch the euro. So it's saying that, not looking like a September hike, Weakness in the dollar's bounced back down, so look for the strength in the pound, strength in the euro. Okay, pound's coming back, very, very volatile. Growth in household spending has been moderate. Okay, so exports stayed soft. So potentially looking that 10 nil unanimous. So it's not looking like we're going to have two rate hikes this year, potentially. That's what I'm taking from that. So solid job gains, though. Policy rates are unchanged. Inflation is below objective. Okay, so nothing stands out the dollar. So that dollar's come straight back. But I mean, reading between the lines, that potentially could mean that, unanimous unchanged decision means that only one rate hike. So we're seeing a little bit of strength coming back into the pound, against that pound really trying to hit this upper level here at 1.56445. So confident the inflation is going to back to its 2% target. So we haven't seen anything dollar related. So that's again, gold's going up, gold's going up. Look for these highs in gold. So hike, we'll have a hike when we see labour improvement. So our pound's getting some more strength, guys. Pound's getting some more strength. Maybe 1.56760 might be a sell if we get that up there, fairly quickly. This 50% line up here. So if we get up to here, 1.56668. Again, I mean, just looking for some value. Again, gold's jumping around. Oh my word. So Treasury buying. So Treasuries are getting strength here. So again, looking for some value. I mean, it's difficult to say. I mean, the dollar's been up, it's been down against the yen. Gold's towards the highs again, but it keeps getting chopped back down. We've seen this big 5-minute candle in the big spike in the pound versus the dollar, which we're seeing here. But realistically, I mean, gold. Let's just have a look at gold. So gold's taking this pretty well. We're seeing this big up move in gold. So we've got the previous highs. Gold. Wow, look at the strength in gold now. We've got these highs up here potentially at 102. So might have a little sell at gold up there. Just missed it. But I mean, it's so volatile. So, a bit of dollar weakness. We're not really seeing that, though, are we? That's what the markets are kind of predicting that we should see, some dollar weakness from that. But we're seeing a bit of pound strength. We're seeing some treasury strength, but we're not seeing a great deal of weakness in the pound versus the dollar here. So, FTSE not doing a great deal. S&P doing absolutely nothing on the back of that. Gold again looking to get back to these highs. It's getting chopped back down. We're in a great sell up there in gold. Just missed it by a couple of ticks. Yeah, it would have been a nice 30, 40 tick move. But again, this is the point, isn't it? Not trying to jump in, the indices, European indices are coming off the highs now. We've got the FTSE perhaps going to go negative from this candle. So initial reaction is a slightly dovish tone. So we're seeing again that the dollar now going positive against the yen. So again, watch for a pop up to these upper levels, maybe at 124, 128. So again, stocks coming off the highs now. The DAX, FTSE, SMI, now coming back. Gold's hovering really about 100, 198. So now going negative now from that positive in the. So it might be an opportunity to sell the pound, perhaps. It's just so difficult, isn't it? So difficult, just looking at the movement and thinking, is this the time to get in? But I mean, all that 5-minute, wick in the is gone. So we've just opened the next 5 minute now. So we've opened a little bit positive, but we've pretty much given away 90% of the gains in the pound, and the euro now is going negative. We're towards the highs. So I mean, it's meant to be dovish. So shorts have been caught out on this. That is for sure. So watch for that. Watch for that pound. Watch this euro, this dollar yen to break these highs up here. Might see a quick bounce up. So really, from being, fairly negative that we were looking negative in the economic sense that we're going to look for 2 rate hikes, then it's now 1, and we're kind of in the middle now where the market's not really sure how to take this. So gold has come all the way away from them highs, all the way down. So looking negative now in the pound versus the dollar. So again, if we start to hit these highs, big level down here, and just these lower fib lines. If we break 1.55877, we'd certainly probably look to get to 1.54971. Again, we've given away all them gains. The euro's looking pretty negative now. Dollar's going. So watch for gold as well. Gold's all the way to the lows. So that dollar remains strong here. We could see, some further selling action in gold. That's the trouble, guys, isn't it? You've got to get in these things early because, the picture changes so very, very quickly. Well, the pound's off again now. The pound's off towards these lower levels. Euro's right on these big levels here at 1.110142. So, no, I'm not going to do anything because I don't, like everybody else in the world, quite understand what is happening. But we've gone from the highs in gold to low. So we've basically gone from one extreme view to another. So right now you're expecting to see probably more weakness in the pound and the euro because we're looking for more, a couple of rate hikes this year and that continued strength in the dollar, which, again, we see that continued strength of the dollar, then, gold should continue to come down because that's right, it gets more expensive. So I guess after the first 5 minutes, what we've seen, if we look at the pound, for instance, is, we've seen that big spike up and it looked very, very strong, but then we gave all the way the gains and then inevitably we go on to make some new lows. But as I said, these big levels really here, 1.55878, and if we're going to, kind of break through then these lower levels. When we saw that, that big selling pre the FOMC minutes, this big, big buying, and then, that big sell-off beforehand. So basically we've got back, I'd say probably above the 50% in this hourly movement here. Yeah, just peaked above that 50%, and we closed below the 38.2, 23.6. So then when we hold below them lows, then you expect these lows to be tested down here, and then to break these previous lows, because there's nowhere else for decent support, should they? Right. Well, there again, we're seeing conflicting information here, that it's saying that this nagging inconsistency in inflation is saying that we could now delay the rate hike. So it's coming. So it's just if it's Q3, Q4, and if it was 2 this year, that's what we're looking for. And now it's looking, again, as I first said, the first comments I took from them, what was said, is it's only looking like 1. But then the markets took it one way. It's pushed the dollar back up. All the gains in gold gave away. All the gains in the pound, the euro given away. But for me, it still screams that, we're still very, very cautious and very nervous about the data and inflation. So it might be the case that there is only 1 rate hike this year. And that's what I took from the initial comments. So really, it's very, very tricky, as I keep saying, to kind of trade these FOMC minutes. They're much more volatile, it seems, than the non-farm payrolls. So just getting in on the movement, I guess, is one way of trading it. But having any kind of real opinion when you've got markets that go up 100 ticks, then come down 100 ticks in the space of 5 minutes, quite difficult to understand what the market's actually anticipating. When you're trading on a spread betting platform, to be able to get in there at 70 ticks when markets are moving that quick is not actually that easy. So, if you're not entirely sure about, position to buy or sell, it's better just to sit on the sidelines sometimes because you don't want to find yourself getting a bad fill and being the wrong side, of a position that kind of jumps and gaps around. There's absolutely, nothing to be gained by being on the wrong side of these moves, that's for sure. So, again, I still feel in my kind of heart of hearts from the initial things that were said, the tone that was said, the bits that I can make out from the squawk, is that it's looking more likely, I would say, the Fed is still hedging as many bets as they can, and they're going to delay and, put off this rate hike, for as long as they can. So for me, that's a little bit of good news, a little bit of respite. So, really we saw the markets, European markets go negative. They've since gone back green. The S&P is really holding towards its relative highs. We saw that big spike up in gold and down, and it hasn't actually gone negative yet. But you'd expect that realistically, if this hourly candle closes anywhere below, certainly, the 50%, at 1.0992 and 1.0975, that it's going to go and make some, some fresh lows because the trend obviously is massively down. So with the rate hike again only being 1, that might bring some short-term buyers back in, but the overall long-term trend you can't really fight. Every time we've got to the highs, we've sold off. So again, I think a lot of people have pushed the market up pretty quickly, the big players, and just got extra shorts up here. And then, even if it is a rate hike this year, it's still a rate hike. It's still the beginning of a cycle that's going to last for another 5, 6, 7, 8, 9, 10 years. So I still think, if we close below these upper levels in gold, we still continue the overall trend and go down, even if it is only one rate hike this year. Because again, it's like the UK. Mark Carney's not ruled out this year, and he's keeping his bets, keeping his cards close to his chest. But at the end of the day, rate hike is inevitable in the next 6 to 12 months. And once they go up, it's not going to be just one rate hike. It's going to be a series of rate hikes. They might be slow. It might take a long time to get to 1%, 1.5%, 2%. But it doesn't matter. It's still going to get there. And that still means huge amounts in the, in the kind of global economic scale. So we're seeing a little bit of strength coming back into that pound. So really, you expect the pound and the euro to gain some strength. If there is only one, kind of rate hike this year, then the dollar to, continue to come away from these highs. But as I said, there's not really any conviction for me personally to start lumping into the pound or lumping into the euro. I wouldn't buy the euro anyway because of my longer term views. But the pound, as I said, we could easily see it get back to 1.64 in the next kind of, couple of months of trading. I still think after the US go up in rates, then the UK will follow suit. So I think the demand for the pound is certainly going to come back in. Well, I think the whole point is after Ben Bernanke left, Janet Yellen came and she said, I'm going to be clear on forward guidance. I'm going to tell you exactly what we're thinking and not let the markets guess. Well, she hasn't. She's been the exact opposite. There's been no clarity on forward guidance. We're still guessing if it's one rate hike, 2 rate hikes. We know it's going to be a rate hike this year. But again, we have nothing to go off. They tell us that it's inflation. They tell us it's growth data. They tell us it's all data dependent. They tell us whatever they think we want to hear, but they don't actually back it up with anything. So yes, unfortunately, it might sound to the layman, I don't know what I'm talking about, but I know as much as anybody else does. And I literally mean anybody else in the world. I know as much as anybody else does. And I can only make a sense of it as like anybody else can. And it sounded to me that it looks like the Fed is still hedging the bets. They're still not confident on inflation. They're still not confident on this continued jobs growth. So it looks to me that they're not going to do a rate hike in Q3. It's going to be Q4, and that means that all this euphoria, should remain to go back into the stocks, and stocks should go higher. Gold should continue its trend and go lower. The dollar should come away a little bit from the highs, but we're still talking about a rate hike, so the dollar's still going to remain strong, and then that weakness will strengthen the weakness that we saw in the euro dollar and cable should slightly rebound. So I'd say I'm not that interested in looking at any euro dollar bounces. I'd be a bit more interested in trading a bit of cable bounce rather than anything else. But I mean, again, that dollar's not striking back, is it? It's hit these upper levels, which I said, but it's really kind of holding its own. It's still a green candle. So really, let's see what happens, in the kind of next couple 15-minute closes, and the next kind of few hourly closes to see if we get, that little bit of a bounce in the pound, which should drag up the euro, and see what exactly happens to the dollar. I'm not checking against the dollar against any other currency pairs right at the minute. I'm just checking against the yen. So there'll be other, correlations you can look at, dollar CAD, dollar Swiss, etc. But we're remaining still fairly buoyant in the dollar across the board, I would suggest. So right now, that suggests to me that we're still looking for a rate hike this year, but it just potentially isn't 2 rate hikes. It probably is more likely to be 1. But then Janet Yellen might come out tomorrow and say something different. I mean, there is no forward guidance. It is all guesswork. It is, trying to be, very kind of read between the lines with these things. And again, we could have sold some gold up here and it would have been a great trade, but it just, it's just so difficult. It's so difficult to put commitment into these trades when you're not fully, aware of all the kind of ramifications of what's been said, because nothing really has been said. It's all conjecture. It's all market commentary. It's all people putting their 2 pence in. We've not got anybody that makes these decisions telling us, yes, 2 rates this year, or no, only 1 rate hike this year. We haven't got anybody telling us. So it's pure guesswork. Yeah, I mean, check for the currency correlation. I mean, you can check, there's all different tools for the currency correlations, and, you can drag up anything, to see what else has been happening. To be honest, I don't look at any of the dollar-based. It's not that interested. I don't trade that much currency, to be honest. I'm more kind of indices, gold, and maybe, kind of, maybe some kind of more pound and more pound-based currencies. I'm a little bit more understanding of them. I'm not too keen on the kind of more exotics, the Swiss base, the kind of Aussie base, New Zealand base. They're a bit too choppy for me. I understand things, like the UK, the US, and the Eurozone. So that's generally where I kind of place my majority of my trade. So we're seeing, the strength coming back in to the pound. To me, we're just going to do a little Fibonacci, where we are now. That 50% is where we're aiming for. So we get to that 50% hold above it. Again, if this is actually one rate hike that the Fed are positioning themselves for, then we should see, that the pound probably close today, fairly strong. We've seen this big sell-off pre-Fed, this big bounce up, market go all the way down, and now we're green. So you'd expect the uptrend really for me to continue because we haven't made a new low below these where the up move started. So I'd say really, this is one rate hike, from the Fed that we're talking about now that we should see, maybe gold go up and then go down overnight, and then the pound and the euro perhaps finish a little bit stronger. That's my only interpretation. I can listen to the wires as you can. I can listen to the same information as you can. I see the same charts as you can. There's nothing I can see or say that you can't see or say yourself. That's not what these sessions are for. These sessions, to give you my interpretation to what's been said in my 15 years of experience. If you don't like it, quite frankly, I couldn't care less. And, if I get comments like that again, I'll just stop doing these webinars altogether because I don't need to do it. Simple as that. Don't need it. So we don't have to let one muppet ruin it for the rest of us. But, it's hard enough to concentrate on these things, answer people's questions, and trade at the same time and try and make some money when you get, you get things like that. It's kind of, what does Janet Yellen know? Give me that. What does Janet Yellen know? What she said that's given the markets any clear direction. So what are you expecting from Steve Ruffley? What are you expecting from me to tell you? It's all very good, isn't it? I love coming onto these forums and these free education sites because people love to give their little keyboard warrior opinions because a little sad nobody sat there with a 50p account doing nothing. Well, I'm sat here with a 6-figure account, so I'm not going to start jumping in for your entertainment, am I? No, I'm not. I'm the one that sat here looking over my swimming pool on the beach with my butt coming out, with my hedge fund. Yeah, I'm the one. I'm the one people are listening to. And if you don't like it, quite frankly, I couldn't care less. Anyway, can't let one person ruin it for the rest. I'll deal with that later. So we're seeing the pound, the gold come back up. So I'd expect gold to get back up here, to be honest, just as a bit of a relief, round about maybe, 1.099, spot 2, just below that 1,100 mark. And really, that's just a kind of technical type trade where we get back to the highs and then it can't make new highs, so it has to come back down. So, yeah, I mean, basically the consensus has just come through now, and it's saying that we've swung from Sept to October, and that's what people are thinking now. It's not Q3, it's Q4 for a rate hike. And that's what I said first of all. So, I can only go for the comments that I hear straight away. But that's why the pound is rebounding now, because it's looking like we're going to go for one rate hike. So as the pound goes up, the euro dollar goes back up, this weakness in the dollar should come back in short term. Because, again, it's not 2 rate hike, it's looking like 1. And as that goes down, then obviously gold gets cheaper. We push gold up, and then we don't really have any emphasis to push gold back to, pre-highs above 1,100 because of the very, very strong downtrend. And then gold, the bears take over and continue to sell gold even higher. So I wouldn't sell gold just yet. I'll wait till we get just below 1,100. And then we're going to see probably continued strength as we are now into the indices because it's not a rate hike now. More free money for everyone to buy stocks and for it to go back up. So great. So that's really what we're looking at. As I said in the first few seconds, if I was just trading this on my own, not answering questions, I probably would have thought to myself, well, yeah, it's looking like 1 rate hike this year, not 2. So generally, bit of a better news for the market. It's not so great for the dollar, a little bit better for the stocks. But again, you can see all this happening in front of your eyes real time. That's what the market is looking at now, not 2 rate hikes, 1. So we want forward guidance from Yellen. It ain't coming. So look for the S&P, look for this trend line. That's where it wants to get back to. It wants to get back to 2118 spot 50. So S&P, if the Dow continues to get higher, should drag the S&P up. Again, and then we see the dollar get a little bit weaker. Then again, we've seen all these lows retrace. We're above the 50% in the pound. So you'd expect, probably the pound and the euro to hold a bit higher. But as I said, it would rather be buying the pound against the dollar. That's for sure. So again, watch for gold to get back up, retest these highs, a good level at this 50% up here. Look at all these highs. So as the dollar goes down, people will buy up gold, but the overall trend in gold really should remain. And, it should bounce, a little bit lower, I think, for me, and continue that downtrend. So got to be careful now because if you build a position in now, you might have to hold it overnight. the majority of, serious traders will be watching the meeting and will have placed their big trades, up here on these big wicks, and the smaller traders will have been in and will have been out. So right now, if you want to build up your opinion, it might be waiting for the confirmation of what all the experts tell us, what all the experts, make of all this, and we get the comments out, all throughout the night, and then people, when they start the open of the European markets, see exactly what it is. I think the consensus for me, from everything that's said, is that we're still cautious on inflation, we're still not entirely sure on growth, so one rate hike this year is probably more likely than two. All right, I'll show you cable. So again, cable, if you want to go off, this spike here, then your 50% is where we're trading right now. Or you can go off the spike, of the first first 2 5-minute candles, which was, from the low to the high here. So that puts you 50%. Again, pretty much similarly where we're trading, because, the lows to the highs. So what you'd expect now is that, we've gone on to make new highs, we've gone on to make new lows. So we're going to pivot around this point here at 1.56283. And, if it is one rate hike this year, you'd expect really to kind of build a position around this 38.2 and this 50%, and then start to break up and then test these highs and perhaps get as high as 1.56835. Again, it all depends, doesn't it? If the market takes that as it's definitely, there's no certainties, is there? But if it's more likely than not to be one rate hike this year, then we should see continued strength back into the pound, because we saw that buying sequence pre-Fed. We saw it aggressively sell off in no space at all, and we're back to the buying, kind of properties here on the 15-minute chart. So again, wait for your 15-minute charts. Every time we close above that 50%, then it's more likely to go on to make a new high than is a new low. So again, it's going off that principle of that it's going to be one rate hike, not two. But I guess anything could happen, couldn't it? Anything could happen now. We've got the long-term players, the short-term players getting involved. We've seen a 7-6 spike in gold. So realistically, again, anything could happen now. So my advice really would be, unless, you're very, very clear on direction, going to hold a trade for any, sustained period of time, then, just do a scalp. Just do a fairly small scalp. And a scalp can be anything. It can be a few seconds, it can be a few minutes, it can be 15 minutes. There's no absolute, set boundaries for what a scalp is. So for me, gold's it's just looking weak, isn't it? You've probably got a lot of institutions waiting for this and, really kind of selling big amounts, of lots up here. So once we start to kind of again hit these lows, and especially if this candle closes red from being green, this hourly, then you'd expect gold to kind of really hit these lower levels here at 1091.8. And then you've got all these levels I've always said, 1086 and back down to 1077. And once we get to 1032, then there's nothing stopping gold to $1,000. Any views on the Kiwi? I don't tend to trade the Kiwi, to be honest. I find it too volatile. I'll have a look. But generally, if I get any questions, I just say sell it. It's what have we got? New Zealand dollar. Yeah, I mean, the monthlies, we've had a hard bounce. Realistically, we've started here to here. So your 50% is here. So we're still below that. So I'd say we've got a little bit of potential wiggle room, to maybe to go up, back up to the 50%. But realistically, it looks very negative to me. So I would say, yeah, a lot of selling. So really, we're going to consolidate around here. Very much the same picture as the euro. We're going to consolidate around here, and I'd say if we continue to close below, these upper levels here at 0.67343, then we're going to go down lower and test. And I would say certainly, we're going to try and test this lower level here, the 61.8, which is at 0.64023, and then below that, really 0.59181. So potentially, if we're trading now, we could go up another 160 ticks, but then you've got 300 ticks of downside and 750 ticks down on the downside. So for me, I had profit taken at the bottom. I don't really see anything from Australia or New Zealand that's going to make me think that's going to outpace the dollar anytime soon. They're just not that kind of economy. So although we are relatively low in kind of monthly, weekly terms, I still see further weakness. So I would not be buying the Aussie or the New Zealand dollar. That's for sure. So again, selling high in kind of intraday terms. All right, guys. Well, again, certainly not a non-event. I mean, the whole point of these things is that you can't be entirely sure what's going to happen because we have no forward guidance. We have no kind of we have no kind of set rules of what to do. So for me, it's very, 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 very difficult to understand, what Janet Yellen's trying to do, what the world markets are trying to do. And when you're talking about these intraday trades, back from these bigger term views, it's very difficult to stay in anything with any kind of conviction. Gold, when it thought it was two, when it thought it was one, it went up. When it thought it was two, it came back down. It's gold's just so volatile with any piece of news right now. And, again, likewise with the dollar, the cable and the pound, cable and the euro dollar. If you don't kind of, get in and get out and then reassess, you find yourself just getting whipsawed in the markets. And I think probably everybody who's traded, over the last kind of few months will have been onside in many, many positions and ended up taking a scratch or a loss because the markets just move so fast. So for me, as I say, I keep my average trade generally around about 20 minutes, 30 minutes and just take what's given to me. And if I don't get the whole of the move, it's not the end of the world for me. All I'm doing is grinding away and taking money out of the markets. And, what I'm not going to do is start, buying gold or selling gold here. And, volatile markets, when I'm trading, a minimum of 15 lots, 75 quid just to put the trade on. If that starts jumping down, I lose 500-600 quid. That's a day's work for me. So I'm not looking just to jump in these things and, and trade necessarily just for the show of it. My job is to make money in the markets. I do these webinars really as a favor. Okay. I don't have to do these webinars and I don't have to share my experience. I don't have to share anything with you. I can just shut up shop, make my money as I do trading because I don't rely on this stuff. I do the books, I do that kind of stuff because people like to learn, and you're an online personality. But for me, I can disappear into the shadows, and you'll never hear from me again. I'm not going to break my heart, that's for sure, guys. Well, listen, anyway, that's pretty much all we got time for today. So realistically, it's look for the news wise, look for the experts, see if it's going to be one rate hike or two. For my initial thought, it's going to be one rate hike. So that's slightly more dovish news for the markets, as in the stocks should go up. And I think gold, again, is going to probably sell off overnight. I think the dollar is probably going to – it's difficult to say what the dollar is going to do, to be honest. But I would say that, we're still on for a hike this year. So nothing in the longer-term picture has changed. But I think for the short term, it just seems to be a little bit more cautious. That's the word, a little bit more cautious on the approach. So – as I said, watch out for any more euro strength and strengthen that pound. I would stick to the pound more than anything, but really don't overcommit. And unless you're keeping an overnight trade on, guys, try and be in and be out. Don't hold long-term positions on the back of this because it can be just too dangerous. It's too much risk. All right, guys. Well, listen, have a good evening and join me for my next presentation, which will be sometime in August. All right, guys. Have a great night. Thank you.